Good morning, or actually good afternoon. Well, good morning to some of you that are on the West Coast. My name is Steven, and with the Padernacht real estate team here at Keller Williams. And this is episode 18 of Mortgage Matters. It's been a couple weeks, so I'm not even going to waste time on an intro. I'm just going to bring on my co-host, Christian Babcock from the Loan Depot. What's up there, buddy?
How we doing?
I'm
You hear
doing
me?
great. How are you?
Good.
I like the patriotism you got there.
This is our home means everything.
Yeah, there it is, man. Very important. Very important.
That's it. I'm wearing it specifically because of the post that I put out last week, right before July 4th, with the VA loan success story.
I wanted to talk to you about that. So tell me, that was a successful veteran that was funded for a new home.
That's right. And we've talked about it in previous episodes. We are one of the biggest VA lenders in the country. So, and we're very proud of that. We have an entire, VA division where we're doing national advertising and working with a lot of our local loan officers to help veterans purchase a home. A lot of veterans don't even know about the benefit, so it's good that we're always getting the word out.
Of course.
There are a lot of veterans in our area. We don't have to be near a base or some of the military towns or cities, which we find tons of veterans. But we have a lot of the NYPD, a lot of the FDNY, a lot of service members that are veterans or even still in the Coast Guard. I actually just spoke with another one yesterday, and they can finance 100% of single family house, condo, multifamilies. They don't do co-ops, but and that's their benefit. Not only can they finance 100%, but they don't pay PMI.
Yep. Just let everybody know the PMI again. I mean, I know what it is, but PMI is what?
PMI is mortgage insurance, which is required on FHA conventional loans when you put down less than 20%.
Yep.
So at the VA, you can finance up to 100%, no money down, and still not pay PMI, and with rates as good or if not better than conventional rates. So it's an amazing benefit, and I'm happy to. So on the one that I posted last week on my Facebook page was, typically these loans, FHA loans and VA loans hold, unfortunately, a bad reputation of taking longer to close. So the reason that I put out that post is because we did the VA loan from beginning to end in 13 days.
How the heck did you make that happen?
Preparation, so preparation, multiple conversations with the real estate agent, especially in the beginning. As soon as we identified that he was going to use the VA, I let the agent know what she needed to know about how to present the offer. I spoke to the lawyer about how to present the offer. Because the main thing is when you're financing 100% is putting down a down payment. So when a seller executes a contract, they're not going to execute a contract without money. They want to make sure that the contract's bound to money. They have a deposit, you have skin in the game, you have money on the line, that you're not just going to walk away from the contract. So in these people's case, they have the money. They have money because closing costs in the area are still going to be about $15,000-$20,000.
Okay.
So what we do in that case is we give the seller the deposit up front, which in their case was $40,000 they gave the seller, which then in turn is coming back to them at the closing. So when we send 100% financing, now the seller's got too much money.
Yeah.
The seller basically now brings that money back, covers the closing costs, and so they're not even putting any more money into the deal. Everything is covered from the initial deposit. So the seller is satisfied, the buyer's getting their 100% financing. We made sure that they did their pest inspection during their regular inspection, because that is the one thing that VA does require is a pest inspection.
Yeah.
For termites and things like that. You always want to do a pest inspection on a regular home inspection, but this is the only loan that really requires to get a copy of it. So I made sure the realtor knew that, so we didn't get it.
Isn't it funny how they do that? Like, make sure you get a pest inspection. Like it seems so random, right? Like don't bother checking for radon. Don't bother checking for this. Make sure you get a pest inspection.
Watch out for those termites. So those are like, that one specifically is one that's missed by a lot of loan officers, and then they scramble towards the end to get the inspector back. So doing that up front. And then a lot of times the VA appraisals can take a little longer because the VA appraisers those appraisals get ordered through the VA. So they have their list of appraisers. So it's not one of our regular guys. It's actually from the VA's list. So in some cases, when things get really busy, those VA appraisers get very busy and they could take a little longer. But, again, nobody's really busy right now. So we got the appraisal back very quick. And that's how we were able to do it. And
That's awesome.
The house was empty. The veteran and his wife were very anxious to close quickly. So
you must have gotten two really good attorneys that were able to communicate.
Oh yeah,
because that listen, 13 days to close. It usually takes 13 days to negotiate a contract.
Well, it's funny you say that. I think it actually took longer for them to negotiate the contract than it took for us to do the entire loan from beginning to end. Yeah.
Oh man. And those are like the ins and outs of the business, right? Like, 13 days to close, but you got to make sure you have attorneys that are on board that are able to make things happen right away.
Right. No, exactly. And they have a good, they have a great attorney. It's a whole team, just, between myself, the attorney and the agents. And the agent that I was working with had never done one of these before, and she was very nervous about how to present it and everything else. So once we kind of went through, like, no, you're going to present it with money, they're doing 100% financing, but they're getting money. So she knew how to present it. Yep. The sellers went for it. And we have another happy veteran going into a home in a market where some people are saying that it's impossible to get a deal like that accepted.
Where was the deal? Was it Westchester County?
It's Putnam County.
Putnam County. Good. Putnam County's hot, man.
Yeah.
Especially up by like Cortland Manor, Shrub Oak, like Yorktown. Like it's really a tough market up there. So that's good, man. That's awesome.
Yeah.
What branch of service? Do you remember what branch of service they were in?
I think it was Army.
Man. Listen, G.I. Joe. That's awesome, dude. Like I love to like those type of stories is kind of like what really drives our business, right?
Yeah.
Like
it's always
I had a deal yesterday where I did a purchase and a sale on the same day for the same clients.
Mm-hmm.
And I mean, listen, I haven't done that. I can't even remember last time I did that. I think I've only done it like less than like 3 or 4 times in the entire 20 years I've been doing this.
Oh, wow, really? Oh.
And they were so happy, and it felt so good to be able to actually make it happen. Because, when you're sitting down on a listing appointment, they're talking to you and they're like, okay, listen, we want to sell, but we got to buy. Right, so then it's like there's so many hurdles, and it's like presenting the offers to make sure that they were able to afford to be able to buy just in case they couldn't sell. And then all of the intricacies and then lining them up on the 2 days. Like you really had to have like the perfect storm. And they were so happy yesterday. And the wife is expecting in another couple of weeks. So that's the type of stuff that really kind of like reminds me why I'm in the business, All
right. I mean, that's what I always talked about. What it's really I mean, there's people that are in my business that like only do refinances. To me, I love doing refinances because I make more money, obviously, but it's the less rewarding part of the business because you're saving some people money, but it's kind of but helping first-time home buyers, stories like this, knowing that you're putting people in a house that they're going to raise a family in and everything else. That's what I always liked about the business. And doing the buy, the sell and buy, simultaneously. I mean, I have a lot of those. I do them pretty regularly. It's been harder to get those offers accepted in this market, but again, it's all about preparation, communication with all parties, and how to present it. It's not impossible. I've got a bunch of them going on right now with buy and sells at the same time.
But so the tricky part is doing them on the same day.
Yeah. No, that's how they're typically done. We close one in the morning, one in the afternoon. Yep.
Let me ask you a question. This is completely like just out of left field, but how often are you going to, or are your loan officers going to closings?
As much as we can. I mean, that's, as we mentioned, it's the most, rewarding part about it. So if we can get there, we get there. I mean, there's not really a lot for us to do, because we're not managing the paperwork. The attorneys and the title company and everything are going there. But, I always like to look on, especially on the buyer's face, because typically, I'm speaking with them on the phone through email and everything else. So to see them face to face is always very rewarding. So I definitely encourage it.
During COVID, the attorneys were really not friendly about it. Like
no, nobody was friendly during COVID. Nobody was friendly. They're like, "What are you doing here?"
I remember doing a closing and they had like the buyer in one room, the seller in another room, this
Yeah.
one in another room, and everybody's masked up and they're going in between rooms. Like,
Yep.
it's crazy the stuff that we kind of went through, like just to get back to this sense of normalcy where we are. And like, it's just a new normal for us.
For real, I feel like during that time too, it's amazing to me how fast everybody was able to pivot.
Yeah.
Like business just didn't stop.
Yeah.
Like we still closed the deals. Like the attorneys really were like on the front lines, and the agents obviously. But there was a time there where agents couldn't even do business, if you remember,
Yeah.
in the beginning of
Yep.
COVID.
Yep.
But
Cease
the
and
deals
desist
that were
everywhere.
right, but the deals that were already in process, like those lawyers, that were in title companies and the people that had to be there. I mean, they took a lot of risk, not knowing what was going on with COVID, especially. I mean, but but everything pivoted. Like, right away guidelines changed. Like we were able to do, electronic closings. We were able to do like New York State, where it was even letting, notaries, change, how they were doing business. So it pivoted. And even as a company, like we went from, everybody being in offices to within like days, everybody working remote, and so laptops were being shipped because, our processors and underwriters, especially, they were always in the office and they had desktop computers. They got laptops to everybody, or they were moving their desktops. And within just a matter of days, we had everybody working remote, almost as if nothing had happened.
Yep. Same thing, kind of like on our end, right? Through KW, like they immediately, like, boom, Gary went, was going live. He was sending out messages. You had all the different coaches, all the different market center leadership, regional leadership, like just reaching out to people. We have this group called, it's called Pivot Shift Ahead. And that group was born out of COVID. Like literally when everything shut down, this guy, his name is James Shaw. He's a KW guy. I don't even know where he's from. I think somewhere in the Midwest. And he started this Facebook group. And to this day, like every single weekday morning, Monday through Friday, he's live. And this guy's got thousands of KW agents logging on. And he literally, his entire thing is just reading a different page out of Gary Keller's Shift book.
Right.
And then just diving deep into it and inviting people to talk about it. And just, it's such a powerful thing. And the way you kind of saw who was really in it for the long haul and who wasn't, you know what I mean? Like I had one of my best years during COVID. 2020 was one of my best years.
So same here. The mortgage industry exploded. We tripled our operations. I mean, some of the larger banks actually went the opposite direction. They kind of shut down, like the big banks, they stopped lending in a lot of different products. So we went the opposite direction. We went all in. We hired more people. We tripled our operations, underwriters, processors, to keep up with the amount of volume, mostly of refinancing, especially in the beginning when rates really dropped. But we also had a purchase boom going on at the same time with all the mass migration and people buying outside of, moving out of cities and buying. So we had a purchase and refi boom all at the same time.
Yeah.
Working 100% remote, so,
Kind of leads me to my next question, buddy. You know where I'm going. Mortgage news, man. Give me some news. What do you got?
Well, I mean, people are saying we're finally maybe seeing inflation crack, so, I'm a little more gun shy to put all my hope on it. But, inflation seems to be cooling off, which, we'll see if it holds. We need consecutive months, of similar reporting like we've just, seen, to get the Fed to cut, and again, the Fed cut is not going to directly impact mortgage rates. Mortgage rates move in real time. So we're already seeing mortgage rates going down based on the news. So, we're in July. If we get another good month in August and then we get roll into September, that's when they're expecting the Fed to cut. But by then, mortgage rates could have already been down about another 0.5% wherever they are today, which would be fantastic. If we can see, low sixes or even high fives and sustain that, I think it's going to start to open up more inventory. Some of the people, they're talking about the golden handcuffs, that don't want to get rid of their low rates. They might, they would want to move, might start
golden
moving.
handcuffs.
So there's all kinds of stuff getting thrown out there. But we're seeing some of that stuff where people might, be willing to give up their super low rate if it means getting into a newer or larger home for their families. A lot of those people are still just on the sidelines right now. So it could open it up for the second half of this year or the first quarter of next year to be a much better market. We'll be doing a lot of refinancing, obviously. We just rolled out a brand new product actually for people that want to do debt consolidation. We have a closed-end second mortgage with a fixed rate. So what that
I
basically
think
is,
you were telling us about that last time, right? That it was going to be rolled out soon.
yeah, we rolled it out today. So we're looking to help people with more debt.
Yeah, all right. Let's get this thing out there. Talk to me about it. All right.
Right. Well, again, it's a second mortgage, but it's a fixed rate second mortgage, and it's going to help a lot of people, especially that may or may not qualify for HELOCs, which are home equity lines of credit. Those could be harder to qualify for. So the guidelines on this fixed rate second mortgage are very similar to a first mortgage. We can go a little further on debt ratios. We can go a little lower on credit, and it's a fixed rate structured 20-year mortgage. So if you're consolidating, let's say, 50,000, or more in credit card debt, it's at 20+%, and we're giving you a 20-year fixed rate principal and interest mortgage at, it's 8-9%, could be literally half the amount of payment, but it's also principal and interest.
Who
So whereas
qualifies
credit
for this
card,
mortgage?
anybody, it's for single families and condos only right now. So we can't do it on co-ops or multifamilies yet or investments. So it's a primary residence, single family home, or condo, and they have to have equity, which a lot of people have right now. So that's essentially what's happened. People bought, if they bought during COVID or even before, they've seen an exponential amount of additional equity added to what they owe. So if somebody owes 300 and their house now is worth 600,000, they only owe 50% of what that house is worth.
Yep. Okay.
So that additional 50% is what they're borrowing against. That's their equity.
Yeah.
So we're able to give a second mortgage that sits behind their first mortgage, so they don't have to give up their super low rate on their first mortgage. And it's just a way of really consolidating debt, or you could use it for home improvement, things like that. Where typically you might be using a home equity line of credit for. So what's attractive about it is that it's a fixed rate, whereas HELOCs are variable.
Yeah.
It's a principal and interest payment, and it's over a 20-year span. So, for the right person, it's going to save them a lot of money and not have to give up their low rate on their first mortgage.
And what kind of I'm not, DTI is not the word I'm looking for. What kind of loan to value, LTV, would they go up to? Like for that person that's at that 300, that house is worth 600. Like how high? Like where's the sweet spot?
It is, actually, I had the guidelines up just a second ago. Let me see if I have it here. So we'll go up to a 90 CLTV. So, that's with a 780 credit score. So that's like,
yeah. Okay, gotcha.
We'll go up to an 85 combined loan to value with a 740 credit score. 720 credit score will go to 80, and a 680 credit score will go to 75.
Okay. I mean, listen, 75%, you're talking about taking about another 150K out.
Mm-hmm.
And then closing costs would only be on that 150,000. Am I correct? Like, what do the closing costs look like on that?
Right. So, New York still has mortgage tax, obviously, but our, typical origination fees are only $995 on that. Then you'll pay mortgage tax and title, but that also, just like a refinance, gets wrapped up into the loan that we're giving them.
Gotcha. Right. Okay.
So,
I mean, listen. So if I'm talking to clients, who's my ideal client that I should be offering this to? Obviously, homeowners, sellers. I guess because I speak to a lot of people, right? Like I'm talking like maybe for sale by owners. I'm talking to expireds.
Mm-hmm.
I guess once I'm digging and I'm finding out the motivation behind why they're selling, maybe they say they owe some money.
Right.
That this might be an option for them.
Yeah. No, it could be an option for, it's really for the people that want to stay in their home. So you more than likely won't have a lot of those conversations. It's really more for our existing clients.
Yeah, because as I said that, I'm like, wait a second, I'm going to convince them to not. I'm going to convince them to not. I'm going to say, wait, don't sell your home.
Right. But I mean, look, but it's so it's really it's people that have a lot of equity, and a lot of times don't even know that they can tap that equity. A lot of times people don't know that they can borrow and take a second mortgage over their first mortgage. So a lot of times people will do a cash out refinance where they're paying off their first mortgage and consolidating all their debt into one new one. but then they're giving up that super low rate that they have.
Yeah,
So
of
it's
course.
for those people that have like a 2.5%, 3% interest rate, but have racked up because of inflation, because of everything that's going on in the economy. They've racked up all this credit card debt, and even may not qualify for a home equity line of credit. Like that's really, is a huge home run. But it's also for the people that do qualify for a home equity line of credit, but maybe the closed-end second is just a better option because it's not an interest only payment. It's principal and interest, so it has a beginning and an end at a fixed rate.
Can you prepay it if you wanted to?
Yeah. So, no.
That's great, man. That's great. So, I mean, make sure make sure later on you get me some information on it so I have it, just so that way I could offer it out to people,
Yeah. Now, in your case, as far as what you're offering, our customers, we have other grants that we just rolled out very recently. We have a $9,000 grant that's a combination of $5,000 from Loan Depot and $4,000 from Fannie Mae.
And who qualifies for that?
Any first-time home buyer that lives in a specific low to moderate income census tract.
Okay.
So it's unique in a lot of banks that offer grants. It's usually if you're buying in a low to moderate income census tract. In this one, it is basically if you currently live in a low to moderate income census tract, you can be buying anywhere in the country at any price. And as long as you're a first-time home buyer and you're in that census tract now, we can get you up to $9,000 in a grant.
And I imagine you have like a zip code or like a some sort of a map that kind of.
It's not zip code, it's census tract. So sometimes you'll have a zip code that has 2-3 census tracts within that same zip code. So, but what I will tell you is probably 90% or 95% of the Bronx qualifies. A lot of parts of Yonkers, Mount Vernon, or Rochelle. I've even, I look up everyone's address now because I've even been surprised at some that do qualify. Where and it's been really a home run.
Is this only for single family homes?
No, this is for every property type.
So just to give you an example, right? I just listed a 2-bedroom co-op yesterday in the Bronx, and we're doing an open house tomorrow. So when buyers are coming in, it's a talking point. I could say this to them that they could use this, and it doesn't affect the board approval or process at all, right? This just happens.
It helps it because if somebody's like, let's say they're a little tight and they got, they have to put 10 or 20% down, and we're giving them $9,000. Now they just increase their reserves. So it's actually even easier to get qualified for a co-op in showing that, all right, we just got this $9,000 grant. So now I have $9,000 of my own money sitting in reserves, which a lot of the co-ops look for.
$9,000 for first-time home buyers.
Right. So the best thing for you to do is really just say, listen, talk to my guy. I can look up their address, their current address, not the address of the co-op. And I can tell them you're a first-time home buyer, you're eligible if then we just qualify them the regular way.
I mean, that's just like a gimme. That's like a layup.
Right.
Because there's nothing that the seller has to worry about. There's nothing. It's legit, like just a grant that comes at closing.
Right. And it's a convention. It's just to attach to a conventional loan. So where, it's nothing different in terms of guidelines, anything else, so yeah, it's been a major home run. We're really happy to have it.
All right. Give me another one. This is great. I like this. What else you got?
I mean, that's one. I mean, there's a lot of most of the first time home buyer incentives we've been talking about already, but we do the Sony May program, which is the state of New York mortgage agency that you've seen. That's got a discounted rate and 3% down payment assistance up to $15,000. That one does have income restrictions though, so the difference between, and it's a great loan and I do tons of them because a lot of people, especially with our condo and co-op buyers, fall within that income level. But what's unique about the one that we were just talking about is there's no income level. So you can make $1 million a year. You can be buying $1 million house. And as long as you're in a low to moderate census tract right now, you'll still get that grant from us. So that's what's just unique about it, that there's no income levels. It's really just based on solely where you live.
Once we finish this stream, I'm going right over to Plata and I'm grabbing a flyer for this $9,000 grant.
Yeah. I'm sending it to you. I have it already prepped for you. I can send it to you.
Yeah, please do. Because Jen's got an open house tomorrow at this co-op. I've got what else do I have? Mostly I'm repping listings these days, but Jen is working with a lot of buyers. Oh my goodness, Mike Plata, this guy. I don't know if he's watching or not, but he just did the impossible for us, by the way. I don't know if he's told you about this deal that he's working on.
I think I was involved, yes, in the
Oh
background.
my Lord, Christian, let me tell you, man,
Yeah. Good.
this is a Loan Depot special.
That's right. Yeah, we do whatever it takes, and we got your back every step of the way.
But I'll tell you what, Christian, it's not just the fact of getting it done is what it comes down to, right? But the level of service that he's been providing, and like it's almost like because I'm used to dealing with you for the most part, and like the way you're on top of stuff, right? Like he's
right there.
He is just like neck and neck. Like this guy, like Saturdays, Sundays, like 4 or 5 times a day. Like it got to the point where the listing agent, because we were repping the buyer, he was like, Mike was like, listen, just give them my number and let me deal with them. And he's been dealing with them. So I just want to say that, God willing, Monday there's a closing happening, and Loan Depot, Mike, was absolutely amazing.
That's the one I think it was denied by another lender, and we picked it up in the last, and we got it, through very, very quickly. And they were like time of the essence, like they were getting pushed to put the house back on the market, right? So
forget about put the house on the market, lose their deposit. Yes, put the house on the market, lose their deposit. They.
Yep. Yeah, no, we got it. We got it done, man. We got it done.
No. So, for anybody that's watching, like seriously, like I don't just toot your horn of the horn of Loan Depot just because we're good friends. You know what I mean? Like you guys really get it done, and this is a specific like instance where it was just out of this world.
Yeah, no, I appreciate definitely, absolutely.
All right, so $9,000 for buyers. Wait, actually, I'm sorry. I want to just segue a little bit because you said something very important earlier, and I don't want to just kind of gloss over it. You said that inflation looks like it's starting to crack, meaning that it's coming down, right? Inflation's coming down.
Right.
And as inflation comes down, which means that the prices of your average cost of eggs, milk, whatever is not costing so much, the Fed in response will then look to lower some of the rates a little bit. Is that how it works?
Right. So, their strategy so far when it comes to, the Fed funds rate, which is attached to the prime rate, which then in turn raises rates on things like credit cards, car loans, pretty much, all types of consumer credit. That's what they've ratcheted up in a way to basically get people to stop spending money. Like that's always been, there's too much money in circulation. So you get people to stop spending money or stop borrowing by raising rates.
Of course, because high interest rates, people ain't going to go out there and.
Right, which then in turn slows down the economy. So what their strategy has been to slow things down to a point where inflation can get back under control, and instead of being out of control by using that strategy. Some will argue that they didn't raise enough. Some will argue that they started raising too late, which is why we've seen kind of this bumpy road. But their strategy was also to slow down the economy just enough, but not enough to push us into a recession.
Okay.
Which is very difficult. So that's why, it's been a very long road for the last 2 years. And now we're just, getting some data out now that looks like their plan may be working. We are slowing down. Prices are coming down slowly. But again, some will argue that there are a lot of red flag indicators that we're already in a recession or going into a recession. And that very well might be true. A recession is basically just a slowdown in the economy. So we might go into a mild recession, not like we saw back in 2008 and 9.
Of course.
But, but that's the way the economy has always moved. You have, there's always recessions going on. You can't have, you can't sustain constant growth year over year without having some retraction, So we'll see, but it seems like it's taking hold from the the most recent data. We'll see what August looks like. We'll see what the rest of this month looks like, and then we'll see.
What are the rates at this morning? Where are the rates this morning?
I'm pricing some 30-year fixed rates in the mid 6s again, 6.5, 6 5/8.
Which I don't have a chart in front of me. That's it's on a downtrend.
On a downward trend. I mean, just as recently as April, 30-year fixed rates were over 7.
Okay.
So, and then the last couple of times we spoke, we were in the upper 6s. Now we're in the mid 6s. Mid 6s basically range from anywhere from 6.5 to 6 3/4. It's kind of like what I consider mid 6s. So, we're in that range. We're going to stay down. And again, every day we see mortgage-backed securities and been trading on the market, is we're getting slowly, but going down day over day, which is why the applications I'm starting, this week, the previous couple of weeks, I'm recommending people don't lock in their rates now because we're going to try to ride that wave down into the next couple of months while they're still in process.
Yeah, I'm looking at the 10-year treasuries.
The leading
And
indicator.
yeah,
Yeah.
I mean, yeah. So like we were at 4.5, and that was just May 28th, and now we're at 4.19. So
Right.
almost a half a point.
And back in April, it was hitting 5. So, and that is a leading indicator of what's going on with mortgage rates also. And so if that number continues to decline, that's the one thing that a consumer can look at on their end is that yield. That's tied to mortgage rates, not directly, but as an indicator.
Yeah, it's a leading indicator, obviously.
Right.
Interesting. All right, dude. Listen, we're running up on time right now, but thank you so much, and we will be back next week, my man. I appreciate you, Christian.
Yeah, you too, bro. Thank you.
All right, later.